All right. It's tendy time. Who's ready to make some tendies today? Savvy, great to see you in here as always, my friend. How are you doing today? How's that portfolio looking? Oh, I'm excited to look at some stocks. So I'm going to start with this one. This one just got recommended to me by a potential client of me, or a potential client of mine in the future. We're going to circle back in about a month or so. But meeting went well with them. But they know Warren Buffett is an idol of mine. And this is a company that he just bought a big portion of. And they do dividends. So Savvy, you might like this one. All your NFT plays are printing. What are your NFT plays again? CSCW, 56%. All right. Yeah. So over here. So CSCW up 56%, LGHL up 12%. I think you asked me to look into them recently too, right? Yeah, DSS 10%, INUV 10%. No sir, the ticker is FNV. This is the company that Warren just bought part of in the last year or so, is what I was told. So I told him to take a look. I looked at some companies today. Of course, gave him the spiel on mine. He likes those. Let's see what's going on with Franco, Nevada, though. Very interesting. 2020 annual just came out recently. The Gold Investment Bad Works. I'll look at their homepage. Leading gold-focused royalty and streaming company, the largest and most diversified portfolio of cash flow producing assets. Its business model provides investors with gold price and exploration optionality while limiting exposure to many of the risks of operating companies. Okay. It's debt free and uses its free cash flow to expand its portfolio and pay dividends. All right. How's your portfolio looking overall today, Savvy? While I start crunching the numbers over here. Give me everyone in here. As usual, give me a one in the chat if we're making some money today. If the market's neither red nor green for you today, and you're just, hoping to send a green by 3 o'clock, so you got an hour and a half, give me some twos so we can get some good feng shui going in here. And if the market's been red to you today, and we really got to get some good feng shui going by 3 o'clock to send this puppy green by the end of the day, give me a 3 up in the chat. Let me know what's going on. I'll even start. I'm always transparent with you guys when I'm making money, when I'm losing money. I'll give you a 3 today. It's not much, but definitely red on the day. Because it appears everything is down. It's going to be for gold and gold royalties. Current as of 3/23, 2021. Let's go back over here. Let's go find their balance sheet. Well, they have a really nice annual report. It's pretty. Give us the balance sheet. Savvy, I thought of a great analogy for a bit that I think you'll appreciate. The right setup is where I'm lacking right now. With a bit, it's almost like a company, or I'm sorry, yeah, like a kid who just took a science test and he got it, he didn't do too hot on it, and his parents asked him how the science test went, and before he says, how he did, he got an F, but before he says how he did, he preludes it with, well, it's important to consider that the whole class, we all, no one did good, no one did well, we agreed that the teacher didn't really teach us what we needed to learn. We agreed that, there was stuff on there that isn't supposed to come up until next quarter. So we're trying to petition for, a better grade. And, meanwhile, you're just waiting for them to say they got an F, but they're not telling you they got an F. And that's a lot what a bit does like, right? It's like, well, how'd you do on the year? What's your net income? What's your net loss? And they're saying, well, it's important that you consider that we had to pay in a lot of interest on our debts, and we had to pay our taxes, and we had depreciation and amortization that are coming off as well, and without those coming off, we did great this year. And they go, okay, well, how'd you do this year? Oh, well, we got an F this year. We lost $300 million this year. Okay, well, that's what I wanted to know. That's how I'm starting to kind of see EBITDA in my head. And the companies that preach that, just look at it like as that kid coming home after doing bad on their science test, and they're making, rather than giving you the answer you want that you're just waiting to hear, they're giving you a long-winded answer as to why it didn't go well, or why you can look at it a different way. And if you look at it in a different lens, it looks a little bit better. And some of these people have EBITDAs that are still negatives. Yeah, exactly. Pay off debts. Oh, shoot. Where is the balance? It's like page 32 is what we gotta be. This is a beautiful balance sheet. Look at that consolidation. Got our total assets, we got our total liabilities, we've got our current assets, we've got our current liabilities. This is going to be in millions. I believe this is in US dollars. I hope. Got our shareholder equity. Exactly. They're not debt free because they've been focused on levering up, and now they got to go pay that lever back. But they're waiting until they ultimately have to. Um, Trying to make sure this is in US dollars. Yeah, I have no reason to believe it's not in US dollars. That's pretty good. That is pretty good. All right, let's get our current share price first. Let's get our. Oh, they're not gonna have the market cap on here. Of course, these bastards aren't. All right, give me a second. We're gonna go to our second best friend when it comes to this, Yahoo Finance. $122.58. See what it closed at. 123.24. 23 billion for the market cap. So 23,629. 6. Pretty decent sized market cap. They do $1 billion in revenue from what I saw on Google. My brief analysis of them while I was still in my meeting. Okay, now let's get into the fun stuff. Same as companies that leverage and then can't pay it off. Yeah, we're trying to, not to say that these companies can't be good if they just preach EBITDA, but more often than not, I think you're going to find a lot of companies that preach a bit, and they give you these long-winded answers as to why they're doing better than the numbers look like they're doing. And I've made those cases too for some companies I've been in. Um, you know, you have emotional attachment, you got to justify, you need a lot of words. So that's why they always say, like, when you ask a company how they're doing, and they give you exactly how they're doing, they show you the numbers right away, they lay it out perfectly for you. They don't give you, you know, 50 pages of an explanation as to why their numbers aren't as good as they'd like them to be, before they even show you the numbers. You know, those are the companies we want to be a part of. They're transparent. They give us what we want. They don't waste our time, most importantly. And these companies, they give you the long-winded answers. They're going to waste the hell out of your time. Every time they file a quarterly report, annual report, you're going to have to read a novel just to see the numbers that matter. Their words do not matter for the most part. They can include them in the end. We can read them optionally, but just show us the numbers. All right. Let's start plugging and chugging. That's going to be in millions, so we'll add 6 zeros. Total assets, 5.5 billion. Then we've got previous year's end, we were at 5.28 billion. $49, and oh my god, yeah, they really have no liabilities at all. This is great. Exactly. Yeah, just lay it out for us if we need it. You know, just give us the info. They've reduced their liabilities. Looks good. So their assets have gone up by $312 million this year since 2019. So went up 1 year, end of 2019 to end of 2020. Assets increased by 312 million. Liabilities decreased by 69 million. Our debt to asset ratio is 0.03. Wow, this is a really good company. I gotta thank this guy for turning me on to them. His name's John. Really smart guy. Runs multiple businesses. Super successful dude. Might actually do some other business operations with him as well, but we'll talk on that in the future if it comes to fruition. But in the meantime, I'm focused on main operations, and we were just at the end just bouncing investment ideas off each other. All right, current assets 663.7 million. Current liabilities 53.2 million. Wow, this company looks like a home run, maybe. And they do dividends, he said. Or he thought they did. I'll have to look into that. And we're just reading the bottom here to see what's going on with dividends. Declared dividends reduced shareholders' equity by 197.2 million, but were partly settled through the issuance of $42.3 million in common shares pursuant to the DRIP. Okay. Shareholders' equity also includes a gain on the fair value of investments of $43.8 million and a gain of $19.6 million in currency translation adjustment in 2020. Okay. So that any dividends and uh, preferred equity has already been reduced, so that's good. Our debt, wow, our current ratio is almost 13. They're a very liquid company. Oh yeah, no worries. I know TC streaming right now too. It's gonna be tricky because the rest of this week I had my meetings today at 11. Tomorrow I've got an in-person meeting with a big company. So I'll be taking the rest of this evening to prepare for that as well. Um, and that one's at 1 o'clock my time, so I don't know what my game plan's going to be. I do want to hop on here for at least a little bit tomorrow, but I should probably take the morning to prepare for that one. This company, they do a lot of revenue. I don't want to disclose what they do, but a lot. So that's one I probably should be prepared for, but I want to hop on here. I want to look at companies with y'all. I want to talk to all of y'all. So, um, you know, even if TC is streaming right now, it's okay. We don't need to have 10, 15, 20 people in here um, to have a good time. But yeah, I might do, maybe I'll do something like a joint stream with him one of these days when I have an afternoon session. Um, yeah, we'll figure something out there. And then Friday, I also have a 10 a.m. meeting, so I'll be in a little bit later as well. So they're going to be afternoon streams the rest of this week out. So we'll have to, I'll talk to TC today and we'll figure something out. But thank you for the heads up. All right, total shareholder equity 540 or 5.443 million or billion. Previous year's end 5.062, so we are definitely heading in the right direction over here. Shareholder equity increased by $381 million. I'd say that's good if you're a shareholder, and that includes the dividends being paid out already. This is a well-oiled machine. Outstanding shares 191 million. This is their 2020 annual report. Let's go look for our revenue now. Got a lot of revenue on here. Let's go look for our income statement. Oh, I need to go back up. Table of contents. This might be good. 1923 would be good pages to look at. Other income and expenses. All right, 1923. That's what we're gonna do. Interesting. It's not really breaking it down like we wanted to. Where's our net income? Q4, okay, maybe this is what we want. Yeah, revenue. So looks like 17 might have ours. Okay, so their adjusted net incomes actually comes in lower than. Uh, See, I don't want their adjusted net income. I just want the net income. Okay, here we go. This is on page 31. Oh, even better. Q4. Just 42. 17 and 42. All right, let's run it. Revenue. Right there. $304 million in revenue. Previous year, same period, 258.1 million. What's going on with Open, Sam? How are you doing today? You tell me your thoughts first, because I just got other meetings. I haven't even looked at the market. I just know I'm red on the day. Not panicked over here. I know I hold strong companies, but what's going on with Open in your eyes? Uh, what's price at today? How much is it down? Because it sounds like it's down from what I'm picking out over here. But yeah, what's the price at today? Did I hit on the wrong page? Am I an idiot? Yes, that was supposed to be 45. I don't know why I wrote down 42. What am I thinking? Okay. Net income. Q4, we're looking at 176.7 million. Previous year, same period. This is Q4, 113.3 million. And then net income year to date, we're looking up here at 326.2 million. And at 344.1 million. So our profit margin looks like it's gone down. Strange. So Q4 2020 profit margin went up to 58% compared to 43.9% in 2019 Q4, but the annual for 2020 reduced to almost 32%, 31.97 compared to 40.77% in 2019. So that's interesting. Let's go find our book value on this one though. I think it looked like a great company. Got 191 million outstanding shares, giving us a book value per share of $28.50, trading at 4.3 times the book right now. This is a well-oiled machine, though, folks, and they're you know, they do dividends as well. I don't know what their dividend is. Let's go. Yep. See, one of my stocks, IEA, not traditionally shorted, looks like it is being shorted by the sell volume. Interesting. Let's see, their record date of 3/2020, so they just paid. We're not going to get their Q1, does not appear. Maybe we could. 26 cents per share. I'm going to go make note of that. Oh, wait, so there. Let's go develop some other opinions on them. George, what's going on, my friend? Again, as always, big fan of your show. Big fan of your show. So I like this company a lot, guys. George, this is the company that John just recommended. We spoke to him. Um, they're trading for 122.50. Uh, Higher than I typically like to buy companies at, but look at how well they run this machine. You know, their assets, they're debt free first and foremost. So their assets are looking at almost $6 billion in total assets. We're up 312 million from end of 2019. This is their annual report. Total liabilities have been reduced from 218 $1 million to 149. So that gives us a debt to asset ratio. Remember, anything under 0.5 is considered a safer investment because um, you know, they're financing the company, they're financing the operations mainly off of shareholder equity, their existing assets, um, not debt. So this is 0.03. This is the lowest I've seen for sure out of any company that I've gone over. 0.03 is very safe. Current ratio is 12.48. So we're looking for anything, remember, above 1.2 is considered healthy liquidity. They've got a ton of liquidity to where they can scale their operation even further. They're not in any trouble at all. They're not going to go bankrupt, you know, anytime soon. You know, knock on wood, I don't want to be the reason that they go bankrupt because I jinxed it, but they're not gonna based on these metrics. They do pay a dividend, which would be good actually for us to calculate over here. Let me pull the calculator up to see how much our shareholder equity would have been worth otherwise. So they got 191 million shares outstanding times 0.26 is the dividend they paid. So that's another $49 million. Yeah, this is FVN, or I'm sorry, FNV is this company, Savvy. So they have another 49.66 million in addition to our shareholder equity, so it's not increasing it drastically, but still, they paid out $50 million pretty much in dividends last quarter. That's only the quarter. Wait, I gotta multiply it by 4. Now you're adding about $200 million in dividends they paid out last year to their shareholders. So let's add, I'm just going to add 200 million to this. Let's see what that does for us for book value wise. Increases the book value to 29, so it still puts us above a 4, but that's pretty darn impressive. They really are running their company like a well-oiled machine, though. You've seen their balance sheet; the numbers look outstanding. They're all going in the direction we want as shareholders. We're getting paid in addition to what our shares are growing in value. Revenue. This is Q4 2020. They did $304 million in revenue versus $258 Q4 2019, up by about $50 million. Annual 2020, annual 2019, left and right here. They did over $1 billion in revenue in 2020. They did $844 million in 2019, so they're up by $176 million on the year. And then when we look at the net income, got $176 million in Q4, almost $177 million in Q4. Off of that, $304 million in revenue, giving us a pretty darn high profit margin. 50% it looks like, yeah, 58%. You can see the numbers to the right now, but yeah, versus 113, way lower profit margin Q4 2019. And then in the annual, that's where we saw our profit margin take a hit. I'm not sure what led to that. I'll have to look at their cash flow statement. I don't do that on here because I don't understand it enough yet, but you know, I will in the future. Yeah, you're looking at some pretty strong numbers. So they're highly profitable. They're bringing in more revenue year over year, quarter after quarter. They pay a dividend. This is a great company to look at. So this is what impressed me. Back to asset ratio 0.03, the lowest I've ever seen yet. Anything under 0.5 is considered a safer investment. Current ratio is 12.5. Extremely healthy level of liquidity. Then, what else we got? Right now, let's do revenue increased in Q4 2020 and 2020 annual. Substantially. Profit margin increased in Q4 2020 compared to Q4 2019, but profit margin decreased annual versus 2019 annual. There we go. All right. Sam, are you still here? If you're still here, Sam, let's take a look at Open Door for a second. $22.47, huh? We're down $3 on the day. Interesting. Agreed. Oops. You love seeing this guy as a founder of your company. I wonder if he's got all his companies on here. Founders Fund, Costco Ventures. That's one we see very often as an investor in a lot of these stacks we were looking at. We just saw one yesterday who had Costco Ventures um, as an investor. Founders Fund, obviously huge. Peter Thiel's I think is the founder of that one. Um, Square, I told you he grew this one. Slide, he grew that one, and then they sold to Google. Um, LinkedIn grew this one. Epoch Innovations, I'm not sure what that was. Pretty impressive, 450% increase in revenue. Clarium Capital, obviously pretty large. PayPal, don't know what these are. These are pre-PayPal. All right, does not look like Sam is with us right now, unfortunately. So we're gonna move on from Open Door, even though I'd love to talk on Open Door. I could talk on Open Door forever. Um, yeah, let's go find some Spacs, huh? Joe, what's going on, my friend? How are you? Tough day to be an Open Door holder. I know. We were just going over it for a little bit, but nothing to worry about. Like I told you, my stance has not changed. It's a down day around the entire market right now. So we're gonna go find some plays that can make us some tendies in the meantime. How's your portfolio looking though? What are some of your other positions? What's this about Morgan Stanley? Shipping's track purchases to clients with 1 million plus net worth. Wow. Is this legit? It's the best thing you can do when you're in strong companies. We're not worried about the days when it's red, right? The stock market can be closed, and we don't really give a shit. I'm planning on holding these companies for a long time that are in my portfolio. The stock market is just it's there, and it serves a friendly reminder every day as to what our shares are worth today. And as long as you got a long-term plan for these shares, you're fine. Doesn't matter if the market's red or green. That's why you don't really see me get affected by the red or green markets. I'm in good companies. Don't matter what everyone else is doing. My companies are strong. They're being built. They're continuing on that path of growth that um, I know they're on. Um, Deal. See, you only have long-term stock, but momentarily you're down 15% of your start capital. Okay, it's all right. 15%'s not insurmountable. You've made a shit ton of money with coins the last few years after starting with 25 euros. What do you mean with coins? What kind of coins are you, or how are coins making you money? Are you talking about like crypto coins? Or are you talking about actual like collector's coins? What are you referring to, Joe? Crypto. What coins have you been making money on? So I'm not seeing anything on E-Trade limiting Spacs. All good, Savvy. I'll see you when you're back, my friend. I'll be on here for about another hour or so. Hmm. Looks like it's just a rumor. Nothing to be worried about. ONE is running. You know what one is running in crypto that I told you guys about a month ago that I got into literally a month ago? We went over it probably for about 20 minutes on here, I think. Is VeChain. VET. I got in at 0.0434 cents. And today it's like it just over the weekend shot up and it's been holding strong. Today, last I saw, was at 0.0939, so I'm already up over 100% on that one. Um, my buddy who got me into that one, or he's been trying to get me in. I always do my own research. I researched for like 3 months before I got in. He's in at like 0.007 or like 0.008 cents. He's got a ton of them, so he's got a 10 bagger on his hands right now. And I think it can go to a dollar. I don't know how when it's gonna go to a dollar, but I think it can and will. Who gives a shit what Rivion's using? I got Luminar. I'm in way better vehicles than Rivion's throwing out there. What's ONE, Hanks? By the way, great to see you, Hanks. How you doing today? We've already done all these. There you go, Joe. Everyone give him a round of applause. That's how we make tendies, brother. Anyone have a Spac they want me to check out? I can't find any DAs from today. I've got a list over here, but if y'all have one, I will do whichever ones y'all want to see. Still too gun shy to throw big money at crypto. Harmony. Hanks, what is Harmony? Is that a crypto? Is that a Spac? Is that an existing stock? Oh, what's Churchill Capital got for us this time? It ain't losing. Oh, one crypto. Ooh. Dramatically fair economy harmony is a fast and open blockchain for decentralized applications. So decentralized apps are run on crypto's blockchain currently, or I'm sorry, on Ethereum's blockchain network currently. That's where they have like the largest. Well, that's where all the D apps are currently being run. Cardano's trying to be a competitor, but they don't have anyone running on there yet. It's not. Theirs is a project. On a scale of Ethereum applications in 2021, Harmony is a sharding protocol. The trustless Ethereum bridge. Our developers use Ethereum tooling such as Solidity and Ether.js. Users use MetaMask to store, and they use our bridge to swap Harmony and Ethereum assets. We achieve 2-second finality for fast transactions and support 1,000 delegating stakers for secure shards. A cross-chain Uniswap port. Uniswap is something to look out for here. That's a good coin and a good exchange. It's already live on our mainnet. Similar to Layer 2 protocols, Harmony is now fully interoperable with the Ethereum ecosystem. I'm not really sure what it does. I don't understand it. A lot of big words in there. They need to do a better job of explaining it. Uh, So they have a proof of stake system, which is what Ethereum is switching to. Currently, it's proof of work. That's what Bitcoin's on as well. The proof of work is that's why miners make money right now. Essentially, that's yeah, their proof of work is that they've done the mining. They've done they've been solving the equations. They've been mining blocks. And for their proof of work, they get 1 Bitcoin or however much Bitcoin or Ethereum or whatever. Those are proof of work concepts. No worries, Hanks. Um, Proof of stake is you have ownership of these assets, and so you have like for Ethereum you have to have at least 32 to have your own proof of stake sharding network, and so they have like networks you can join, but you just basically stake your Ethereum in that case, and you're incentivized to confirm transactions, but you have people all over this blockchain. It doesn't have to get confirmed by everyone as long as it's confirmed by people who have proof of stake. um, Randomly you're going to have shard groups that, or shard like staking groups. Uh, you're going to have those groups that get rewarded randomly for X number of transactions that they confirm. And then the reason why people have to be honest about it is um, if they're confirming false transactions or they're confirming transactions that shouldn't be happening, um, they get penalized. They get their stake taken. So that's proof of stake. It goes up. Do I like it long term? I don't understand what they're doing, to be honest. I need to do more digging. This isn't a fault. It's not a knock on their product. It's not a knock on their team. It's not a knock on anything. I just don't understand it. They explained everything in big words, and that's a big mistake that I see in the crypto landscape now. Is they throw these big words at everyone, whether it's intentionally to confuse them, or whether it's for the sake of they don't know how to explain it any better. Um, it's really hard to understand DApps, new blockchains, um, yeah, without an existing knowledge. They need to simplify it. They need to simplify it so that people know what they're buying into, and then if they want to see it elaborated on, they can. Tron. I've seen Tron for a few years now, since the 2017-2018 crypto run, Joe. And that's where I lost a lot of money. I mean, I was fortunate that I was in good positions, such as Bitcoin and Ethereum. I had most of my stake in there, but interesting. But all the altcoins I bought went to shit. Tron was a coin that I considered back then too. I'm not saying it's a bad coin. Um, oh, is this like a converter? Uh, Tron I'm just familiar with from back then. I don't remember what they do though. Let me see. So 10,000 of these equal 1.18. Yeah, be careful though. In these pumps, you're going to see a lot of these companies. They're not, or a lot of these projects aren't really going to be worth anything after this. Like you might get some short-term gains. Not saying this is one. Just be careful. If you're riding the pump and you're not in good projects and you're not in like projects that have the potential and you have confidence in for the sake of longevity, that's where you can get crushed. Yes, Savvy, welcome back, my friend. All right, let me look at Tron really quick, crypto, and then I'm going to get into this investor presentation so we can see. Oh no, the Spac. Let's add one more to the chart today, to our database. At least one. We can. Oh no, I don't want to do that. I'm going to go to their website. Tron. Is Tron a pyramid scheme? You never like to see that search result. Decentralize the web. Okay. So Tron runs on Ethereum, it looks. They knew I was going to the website. They knew to have something about Warren Buffett on there. Hosting over 26 million accounts, 1.7 billion transactions. Yeah, whatever. What does it do? What does it do? Establishment of more overseas offices in preparation and our team and yada 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 yada. It's really not a good sign. Just thinking out loud here, it's not a good sign that they're not saying anything about the technology itself. They're talking about its partners. They're talking about foundations. They're talking about this guy having lunch with Warren Buffett. Now he's this brilliant guy in Asia. Um, hmm. I'm not gonna look at the GitHub. They need to have it simplified. It's not a good sign. All right, what does Tron Crypto do? That's what we need to figure out now. Tron is a blockchain-based decentralized platform that aims to build a free global digital content entertainment system. What? With distributed storage technology, it allows easy and a cost-effective sharing of digital content. I don't know. Job, I'm not getting good vibes here. I could be wrong, but like, I really still have no idea what they're aiming to do. Um, what their vision is. Their website has a lot of red flags for me too. Let me know if you're still here, Job, and I hope that is at least somewhat helpful. I'm not saying you can't make short-term gains on it. I'm not even saying it's a bad investment long-term. I'm just getting a lot of bad vibes. But just trying to call it like I sees it for you. This is gonna be for another. If anyone likes Churchill Capital, we saw what happened to CCIV. How are they doing today? Are they back in 15 to 20 yet for me? Oh, they're coming closer to 15 to 20, guys. They're getting closer. They're inching closer. This is their new one for a company called Skillsoft. Thank you, Savvy. Yes, yes, yes. Anyone in here, if you have not already, please, please, please smash that like button, smash that subscribe button, and ring the little bell next to it so that you get notified every single time we drop a new video, every time we go live, and we're making money up in here, which is every single day the stock market's open, folks. It doesn't matter if it's red and everyone else is hiding. We're out here. We're hunting because we're alphas. We got some alpha females in here too, hunting with us, looking for opportunity while everyone else hides. Look at all this opportunity out here. Cheap. Yeah, I wish I could elaborate more for you, Job. I just I don't like. I seriously, I still, after going through their whole website, after going and looking on Google, you're seeing things about is blank a pyramid scheme was one of the first questions. Never a good sign. Typically, it is a pyramid scheme. Uh, there was nothing about the technology in there that was really impressive. There was nothing about what their vision is or what their mission or their goal is. Getting just contradicting answers everywhere I looked. I would stay away. I'm going to stay away just off of that. But short-term gains, there can be short-term gains for anything if the market's right. Like I said, this past year didn't take a genius to. You don't have to be a genius to make money in a bull market, right? That's the old saying. When you can make money in a bear market, that's what's very impressive. But yeah, we could. I mean, my buddy, we talk all the time. You could have closed your eyes this past year and thrown a dart at a board with the companies from the S&P 500 on there, and you would have made money. It didn't take a genius, really. Of course, there's some shitty companies out there. Don't want to discredit any of the gains that we've all made, but this market has been just absolutely bonkers. This is CCX is the ticker. Savvy. CCX, they're trading for $9.99 right now. They are merging with a company. This is Churchill Capital 2.0. Another Spac by them. I'm trying to see what they do. Take me to your homepage. Oh, this is investor.skillsoft. I want to go to their homepage. Online learning, training, and talent solutions. Okay, so this is SaaS. Yep, exactly, Savvy. Alright, online learning, training, talent. This is going to be as of 3/24/2021. Current price is $9.99. You can buy a Tesla with Bitcoin now. Isn't that fucking crazy? When I first bought Bitcoin in September 2016, I never ever envisioned it going to, anywhere near where it has. Actually, I told the story, not too long ago. I bought Bitcoin back in September 2016. That was my first exposure to it. Got $100 worth of it, and it was trading at about $900 a coin at that time, September 2016. If you want to go fact check me, um, so I paid about $100. I got a little over zero point 0.1 bitcoins, and I used that to buy weed on the dark web when I was in college. And that has now turned out to be the most expensive weed of all time that I've ever bought. That is, not saying what I did was good, not saying, not endorsing illegal activities, but yeah, did that, and that's like a $5,000 bag of weed so far. So uh, probably not worth it. Probably not worth it at all. If I could go back, probably wouldn't have done that. What do I need here? 861 million for the market cap. And it closed at 9.99 yesterday, so no movement. And this is already giving me red flags. It feels like Lucid Motors 2.0. Churchill Capital is a bunch of fucking. I'm not gonna call them con men or con artists, I should say. I'm not gonna call them that, but they they don't give a shit about the little guy. They don't care about their retail investors. Um, this is, I mean, let's look at the terms of the deal before I jump to this conclusion. But this is exactly what happened with Lucid. Way too high of a market cap before anything ever happened there. We saw the market cap get up to $14 billion when the price was at $60, before there was ever even an official announcement. And then as soon as it snapped, the deal terms came out, we found out that that was actually $92 billion post-merger, and the price just uh, collapsed. And everyone thought it was the big guys colluding against them. Like, yeah, but it's not the ones you think. It's the people who are bringing it public. Let's go see what's going on over here, though. Let's see what our transaction overview looks like. That's the first thing we need. What's this? Slide 20 has. Go to markets. All right, where's our transaction overview? There we go. What's our enterprise value? They made it super hard for me to decipher when Lucid got announced in that investor presentation. So I would be surprised if it wasn't difficult over here as well. So why it's important to know the investors of the companies, guys. Who are we in the same corner of? We want someone who's on our team. We don't want someone who just has their own interest in mind. It's okay to have their interest in mind, but make sure you have your other friends' interests in mind as well. Don't be a selfish prick about anything in life. So any other investor presentation we look at, it's pretty fucking easy to find the enterprise value and the equity value. It's black and white, and here it is not the same. I swear, dude, I'm gonna make it my mission to take down Churchill Capital once and for all. Too many of my friends are getting hurt by them. Oh, Churchill's taken over 50.1%. Whoa. Hmm. Very interesting. So yeah, it's not as bad of a deal as I'm thinking, but I can't find the enterprise value and the equity value for the life of me. There we go. Nope, that's old companies. Nope, not there either. Man, I wonder why they're making it so hard to figure this out for them. Man. This is that same guy we talked about, Savvy, the guy who's got a long-winded answer for why something's great without telling you what you're actually looking for. It's the EBITDA guy. Bet they preach EBITDA too. Oh, what do you know? I don't even know. This is crazy. Company's got a lot of existing debt. Looks like 2.2 billion, 2.36 billion dollars of debt. Um, this is crazy. This is absolutely asinine. We're raising 1.6. Oh my god. They're screwing people. So they're saying the equity value of the company, that's what this is going to be, is $1.66 billion. I believe it's 1.3 billion. I'm pretty sure is the enterprise value. It shouldn't be this difficult though. Yeah, it shouldn't be this difficult to find that out. Only shady companies would do that. All right, let's find out what we're gonna own. We're gonna own 50.1%. Yeah, I mean you can't get down on these days. It's everyone. No one likes losing money, but you know the weak-minded investors get really down on these days. They're just the noobs, the ones who are only used to the printer going. We're not scared of these days. We want these days. All right, enterprise value is 1.3 billion. And then equity value is going to be 1.666. I'll be there. Billion. All right, so even at 9.99, it's already above 1.666 billion. That's interesting. All right, let's go look at the numbers though. So they don't give us any actual net income. It's way more fun to see your money grow. I think you'd have to be an idiot to argue with that one. So I'm definitely in your corner there, Job. I don't want their adjusted revenue. I want their, oh my God, I want their revenue. These guys are fudging the numbers all over. They're crooks. Churchill Capital is officially crooks in the book of Mike Lowe. $808 million. What does LTM equal to? No, it'll be 2019. That's a full year. 808 million of full revenue. That's 2019. It's a decent amount of revenue. Unfortunately, we don't know what their net income is from that. Alright, what's the combined gross revenue over here? So they think that it's going to go down in revenue? That doesn't make much sense. So this was their best year yet. They're expecting it to just stay flat. That makes no sense. There's no growth happening here. So new 2020, 21, and 22. That's all they give us, as you can see. They gave us ranges also. Let's just use the high end. Jesus. Oh man, crooks make Mike grumpy. Actually, screw it. We're not going to go high end. We're not going to give them benefit of the doubt. They don't deserve the benefit of the doubt. And 675. You can see we got no growth happening over here, folks. We just did $808 million in revenue in 2019 between the two companies combined. This is Skillsoft and Global Knowledge. Let me go over here and make sure I update that. So yeah, you can see 808 million in combined revenue. That's fine. In 2019, 2020, they're estimating they're going to finish around here, which is interesting because they were just at 721 million in combined revenue, gross revenue, as of the 31st of October. So I'm very interested in how they're going to go backwards. In 2021, supposed to even make less money than they did over here, and then in 2022 going to make even, probably less money than they did here, honestly. So you're buying a company that's going completely backwards over here. They don't have, I don't want adjusted net income. I want their just net income. I don't care about their EBITDA. It makes no sense. The guy, like we talked about Savvy, the guy, you asked him how he did on his science test. Well, the whole class failed. The teacher didn't teach us this. We're putting together a petition. We're gonna take the test again. Yada yada yada. No one else did good, Mom. That's the guy who preaches that. 2020, 2021, and 2022. And then this is gonna give us a growth rate that's, I think it's gonna be one of our first backwards growth rates. Where we started. We're starting at 808, and we're going to finish at 675, and it's going to take us 3 years to get there. So we got our first negative CAGR, very conservative. So the one good thing is that they got a conservative CAGR. This is from 2019 through 2022. What's our total addressable market? Attractive market opportunity. We'll be the judge of that. Total addressable market. Global professional e-learning is 28 billion. U.S. professional learning 130 billion. Global professional learning 300 billion. I don't believe in that. Yeah, we're gonna go off 28 billion. Even this is questionable. We're doing 9 billion. It's not 28 billion. That's what they think. That's what they say exists out there. But we know that 9 billion does exist. And 16 billion exists in 2025. It's the science, kid. Make note of this. Yikes. TAM is 9 billion. They say closer to 28 billion. To 45 billion, but they only know that 16 billion would be there in today's climate. You be the judge. I think there are a bunch of formulate your own opinions on them. Yeah, exactly, right. I mean, I don't want to make it seem like they're a unique case. Like, all SPACs are going to have their EBITDA on there because that's, I think this is like, I compare it to the closest we've got, the public investor can, or the retail investor has gotten to investing in private equity. A lot of these companies, because SPACs are cheaper than, a typical IPO would be, um, a lot of these SPACs, they're not in a position where a company would typically be going public. Um, a lot of them are pre-revenue we're seeing, which is asinine to go public when you don't even have a single dollar of revenue coming in. Like, people are investing strictly into your research and development. That's what you get in private equity. But those are like early seed rounds. It's incredible that some of these companies have made it to, their Series E, F, and then, going public through SPAC when they haven't brought in a single dollar of revenue. It tells people they've got very charismatic people leading the way who are able to go and get investments in a company that doesn't make any money. I, as an investor, I don't want to put money into a company that doesn't make dollars. How do I know my money's going to grow? How do I know that their research and development is ever going to pay off? Not saying that's here. They have existing revenue in this company, but that's how I see SPACs. So a bit. I don't want to make it seem like it's unusual to see it. It's just, it can't be what someone's only preaching. I don't care about your EBITDA. All of those expenses exist. If you failed the project, just say you failed the project and tell me why you failed the project. Own up to it. But all their numbers, they just make it super difficult to interpret, and that is typically tactical. That's what a con artist does. They've got every answer in the world besides the answer to the question that you asked them. A lot of red flags. Is, let's see. Public company is a three-way merger between Churchill Capital, Skillsoft, and Global Knowledge. Financial projections of the company going backwards, revenue-wise, year over year. I would touch this stock with a 10-foot pole. Alright, there is our summary on CCX. I wonder, there's got to be people who are saying Churchill Capital's a bunch of con men. Let's see what people ask after that. Let's do this. This is always where you get the juiciest answers. Reddit. Let's see what people say on Reddit about Churchill Capital. Let's see. The thing that grinds my gears is when they put goodwill under assets. Yeah, right. It should only be there if you're not paying it out. Exactly. Yeah, you can't add money you've paid out, even if it's for charity, to your balance sheet. Nope. All right, Job, thank you for stopping in, my friend. I will be back tomorrow in the afternoon as well. Likely, maybe early morning I might come in and do like an early morning session. But I have a meeting tomorrow at 1 o'clock that I need to prepare for as well, so I will not be here as late or as, yeah, I won't be streaming my usual time tomorrow and Friday as well. So I will see you when I see you. Have a great day, my friend. Thank you for stopping in. Appreciate you and your support as always, sir. Let's see, Michael Klein. I don't know if this is the guy. Does this guy look like a crook to you, Savvy? It looks like this is a press piece he paid for. strange. It seems like someone that would have a Wikipedia about them, but for some reason they don't. Alright, I'm about to sign off for the day. I am pooped. Gotta prepare for tomorrow as well. Thank you, thank you, thank you for tuning in. Appreciate y'all. I will be back tomorrow. Not sure when, but I will be back. Just wanted to stop in and say hello for the day. So, y'all have a great rest of your day. I will see you tomorrow.